Welcome to another episode of Bitcoin Magazine Live. I am your host Q, coming to you yet again from my mother's basement on this Tuesday, October 4th. And I am joined by my co-host P, and we all have one question for you, P. Will you be eating a shoe today?
My good man, today is not that day, but rest assured, gentle listeners, soon, very soon, I will be eating a piece of shoe leather. But other than that, I'm doing great. Life is good.
I didn't ask how you're doing. I don't
know,
give
but
a shit.
I'm answering anyway. This is my time. It's my time. No, life is good. It's crazy. The world is insane. We're going to be talking about it. What else we got, Q? What do we have in store for the people?
We are going to be joined in just a moment by none other than Fred Thiel, the CEO and founder of Marathon Digital, one of the largest publicly traded mining companies in the world. And then, of course, we're going to kick things off in just a moment with news and notes. And before we do that, I do want to remind everyone that Bitcoin Amsterdam kicks off in 8 days. If you are over in Europe, if you're not and you want to, this will be the biggest, baddest Bitcoin bash in all of Europe land. Be sure to lock in your tickets now. Use promo code BMLive to get 10% off. You're not going to want to miss this party. Trust me, the FOMO is really settling in right now. But let's dive into some news and notes. Big on the Twitter sphere, not so big anywhere else in my opinion, but there's a rumor swirling now that Elon Musk looks like he will buy Twitter at the previously agreed upon price of $44 billion. Do we really care? I don't know. But the question I want to ask to the two of you is, where would Bitcoin Twitter exist? Where would that community live if Twitter didn't exist?
Ooh, good question. I don't know. I feel like it used to be on Reddit or Bitcoin Talks and then moved to Twitter. I don't know where it would go next, to be honest. Pete, what are your thoughts?
I mean, Reddit, Reddit used to be, that was a significant period in Bitcoin's history where Reddit was the social platform of choice. That shifted to Twitter. Twitter, of course, has censorship issues. People have tried to use Mastodon, but with Mastodon, one of the issues is that you can pipe Twitter feeds directly into Mastodon. It's a federated Twitter alternative. The problem is you are still in a position where you have to trust individual people who run a specific Mastodon server in order to be able to maintain your stuff. And so if those people ever go down or their servers get fucked up, then all your shit gets lost, or rather you lose access to that community. I think Nostro is something that is a newer system that I am personally very excited about. It is a much more decentralized system than something like Mastodon, but we would figure it out. That's the beauty of creating a decentralized, resilient group of people, if not protocol, is that I have more faith in the Bitcoin community than really any other. And there are technical alternatives out there. We just would shift over and embrace them.
Yeah, I'll add one more point. I don't think it's ready yet, but Zion, Justin Rezvani is the founder of it. I know JP Sears is kind of his marketing guy. Very funny comedian, but I think that when that's ready, that will compete against Mastodon and Nostr as well. So not ready yet. I think they're still in alpha or beta for it, but really excited for that project to come to fruition.
And, that's a great point. I mean, Sphinx is, or what is it? What do they call it?
Zion.
Zion is super interesting. Zion is it's like, I think they're still open source. They might be closed source, but basically they took the open source platform, Sphinx chat, and then added features on top of that, built out, or they're in the process of building out some really cool stuff there. So there are a lot of cool options. But yeah, Nostra is something that I would recommend people check out. It's getting a lot of traction these days.
Yeah, I mean, you guys didn't directly say it, but the dream of the orange checkmarked version of Twitter, or just like a literal copy and paste. My dark horse would be if Twitter falls to the dark side and becomes one of the Sith Lords, that Jack Dorsey will just come back out and recreate Twitter just on the Bitcoin blockchain itself. But
wait,
I don't
know. Well, speaking of,
wait, no, not your turn to talk.
Come on, bro, put me in, coach.
Go ahead.
Keep going.
Go ahead.
All right. You threw me off my whole train. Anyway, speaking of communication platforms and cool shit that's being built, potentially involving Bitcoin's blockchain, Impervious browser has they're going to release their alpha release very soon. Impervious browser is part of Impervious.ai. They are it's I don't even want to say it's a layer on top of the Lightning Network, but it is a set of APIs, I believe SDKs, that allow developers to build tools and things on top of the Lightning Network. They had a really cool hackathon last year, and they created some demos of using Lightning to initiate VPN connections. So actually transmitting, handshake data through the Lightning Network in order to initiate that, that VPN transaction connection. And they've been talking for a while about the Impervious browser. They announced it a while back, and it's been in development, but it's basically going to be a censorship-resistant, decentralized browser that is that they claim will have, unlimited P2P, group video calls, encrypted messaging, file sharing, live docs, Lightning, and of course, as they say in their tweet, it will all be censorship and surveillance resistant. They're basically trying to eat Chrome's lunch and power that all on top of the incredibly robust Lightning Network. So super exciting stuff. It is a big goal that they are taking on. They are trying to bite off a significant chunk of food, I guess, in this metaphor, but more power to them. And I'm really excited to see what happens next. So keep your eyes peeled.
Yeah. Do you want to also share, they also had a rollout at B22 and just sort of what that looked like and what they were talking about there?
Yeah, absolutely. So they announced the a bunch of the details about this browser, which is now, they're announcing, they haven't released it yet. So they announced that they on 10/19 they're going to be releasing the alpha release. They originally announced the browser at B22, and they basically just talked about the features that I just went through and what it would mean and the goals that they're trying to set. So it's exciting stuff.
I want to talk some derivatives. I want to talk what the hell is going on with our banks right now. So according to a tweet sent out by Track Inflation, the banks are over levered to the tune of $2 quadrillion in derivatives. For context, 1 quadrillion is a million times a million. Like a lot of zeros, okay? Just follow along for a second. A few of these banks include JP Morgan with over $61 trillion of derivatives, Goldman Sachs with over $50 trillion, and Citibank with over $46 trillion derivatives. Now, what the fuck is a derivative? Derivative could be anything that essentially is viewed as a hedge against the core business of the bank. If you haven't seen The Big Short, go watch The Big Short. If you've watched The Big Short, go read The Big Short. Credit default swaps, the insurance policy that Michael Burry took out against all the mortgage-backed securities that he thought would eventually collapse and fail, that is considered a derivative. So if you're telling me all of these banking entities, and it's not just JP Morgan, Goldman, Citibank, it's Bank of America, Wells Fargo, HSBC, US Bank, PNC, like every bank, Truist, Citizens, Fifth, Capital One. Surprisingly, the one I don't see on this list is Credit Suisse. So, hey, Zoltan, maybe talk to your boys because shit's going down. Look, this reads to me, seeing something like this, seeing the rhetoric that's pushed forward by some of the reports and analysts of these gurus, and then seeing the conversations that the CEO, what was Jamie Dimon talking about 2 weeks ago in front of Congress? Like, shit is about to hit the fan and it's going to get really bad. You have these analysts saying, oh, everything is fine and good. But we saw the tweet from James Lavish last week where credit default swaps are shooting through the roof for nation states. Now you have banking entities buying up any derivative they can to hedge against their core business, almost as if they are all anticipating and gearing up and getting ready for some imminent collapse or failure downwards. But they're going to keep telling you and I, it's all good. Give us more of your money. Like, yeah. We're good. No. It's not that bad. Like, ignore that number. Ignore this number. Do this, do that. Bankers' one job is to make money. And if you're telling me they're putting their money to focus on a hedge against their core business and it's a growing position, Sir, do not lie to me. Do not lie to my face. I don't know. Maybe I'm interpreting it. I am the doom and gloom guy here. Chris, Pete, I turn it over to you guys just to maybe rein in my terror if you guys think so.
I mean, what's in the Genesis block? The chancellor begins the second bailout of banks. I mean, with them so highly levered, it's not if they blow up, it's when. I know Warren Buffett, we bash him a lot on this show, but he always talks about, those who understand leverage don't use it, and those that don't, that are smart enough. I forget that. Basically, it's basically saying if you're really smart, you don't use it because you know what it does. If you're really dumb and you use it, you're bound to blow yourself up. So, I completely butchered that quote. But anyway, nonetheless, it looks like we were going to bail them out a third and a fourth and a fifth time. That's what Bitcoin's trying to get away from. We know Bitcoin's monetary policy and there are no bailouts. I know that people have predicted that maybe in the future, Bitcoin companies will get bailed out because otherwise the countries will go down and they'll be bailing them out with fiat currency. Obviously, you can't print Bitcoin. But yeah, we haven't seen that play out yet.
So how many countries are going to get bailed out by oil? I know I made the outlandish statement that Sri Lanka would be purchased by China's hordes of wheat, but I do think we could be entering a very cold winter where, like certain debts are just paid off with like energy credits, or like, hey, like we'll give you more of this if you just like write off 2 of our bonds or whatever, $2 million worth of bonds. I don't know.
I'm not sure. I think there was a school somewhere in Europe where they weren't putting on the heat yet. They were just handing out blankets to kids in the classroom. So I guess it was getting pretty cold there, but
Hey,
very,
man,
very interesting.
it only became October, not time for the heaters. I remember
Yeah.
that was a weird thing in college that I don't know, maybe this is an East Coast thing, Chris, but it did not register in my mind that my college dorm rooms for 6 months out of the year, AC is off and it's only heaters. And the other 6 months of the year, the heaters are off and only AC is on.
Yep. That was
Like,
same for me as well.
That doesn't make sense to me. But what do I know? Chris, talk to us about the Treasury Department.
So the Treasury Department says crypto could pose a risk to the financial system. Nah, just Bitcoin, or at least that's my opinion. There's a great minute and a half clip I'm about to play that you can just check out them talking about it. So give me 1 second.
One Mississippi.
Perfect timing.
On that, Kate.
Hey there, Carl. That's right. Another government agency warning about potential risks in crypto. This time it's the Treasury Department's Financial Stability Oversight Committee. In a new report out today, FSOC, as it's also called, saying crypto assets could pose a risk to U.S. financial stability if their interconnections with traditional finance or overall scale were to grow without adherence to or being paired with appropriate regulation. That would include existing enforcement of the existing regulatory structure. The report goes on to say that the scale of crypto asset activities has increased, and so has the overlap with Wall Street. Right now, they say those are relatively limited, but it could increase rapidly. One big area of concern they call out here is stable coins. Those are the cryptocurrencies pegged to the price of $1. It does note many of these are backed by traditional bank assets like treasuries or short-term debt. FSOC also points out some more traditional Wall Street firms now offering crypto services. It does say that some players in the market here are opaque. It calls out a lack of transparency and makes some recommendations as well. It asks for more enforcement, more work between state and federal regulators, and then reducing some of the regulatory gaps it sees out there, potential regulatory arbitrage as well. It does ask Congress to pass legislation, but FSOC stops short here of backing any particular bill or endorsing any of the bills that are heading to Congress eventually. Back to you.
Now, what a day for.
Peace.
I mean, these, God, I'm like, it's all these just talking heads. They get on these shows and they basically just like shit all over, Bitcoin and everything else. I mean, one thing that I did think was very interesting in this clip is she specifically said that something about the interconnections between the traditional financial markets and the cryptocurrency markets. So, I mean, you could read this as, look, as long as they stay separate, as long as it's, separate but equal, then we're good to go. And that's the positive thing that I'm going to take out of this. She's saying cryptocurrency, I hate that word. Let's say shitcoins and Bitcoin is good, but we need to remove KYC AML restrictions and keep them keep banks and separate entities from trying to infiltrate the Bitcoin space. That's what I'm taking away from this.
The only thing she didn't mention was like CBDC is good. Like that would have just topped off the clip basically.
She fucked it up. I'm sure as she came off camera, they were like, CBDC is good. Say the thing.
I love that is your takeaway. You very liberally, I think, interpreted her words and her actions there.
I guess I might say insanely, but I see what I see.
I mean, hey man, good for you. When you get a chance, feel free to share whatever you're smoking with me, because I took that as, I don't care what you say, P. Like, literally the only thing stopping the US government from really attacking, going after Bitcoin right now is the fact that somehow, some way, we actually owe a debt of gratitude Congress's daddy, Gary Gensler. Because so as Papa Gensler is in office calling Bitcoin a commodity, we will have a level of protection that will otherwise not be afforded to the shitcoins that are all illegal securities. But if this is all held up by just Gary Gensler's word, this literally can change in 2-4. I don't know how long his terms are, but like we could be looking at just the next head of the SEC coming in and be like, Bitcoin is the worst attack. Like that's the only thing stopping a full blown attack on Bitcoin, in my opinion, right now. So I'm gonna go keep on doing my sexual favors to Gary Gensler, because that's the only reason Gary does this.
You're doing the Lord's work, Q, and
I'm doing it for you.
We appreciate it. We appreciate it. Yeah, of course, I'm being facetious and making a joke about this comment, but I think we're going to keep seeing more and more of this. Don't trust major news outlets. They're just saying whatever the fuck they're going to say, and it's all just pre-recorded nonsense. They get in little drafts in front of them. They have on the little cards, and they read what it says, and the narrative is going to become more and more of an attack. The whole idea of like never let a good crisis go to waste. The whole Terra Luna blow up, which of course Bitcoiners were like, this is fucking bullshit. Do not get taken in by this. And then people did. It blew up, and now everybody's like, we have to protect the poor, unarmed children and save Christmas. And they're just using this as an excuse. So get used to it, my friends. Keep fighting the good fight. Take custody of your own private keys, not your Bitcoin. Stay humble, stack sats, all that good stuff.
But hey, I know the risk appetite and can safely determine who is going to score the first touchdown on Thursday Night Football, but I cannot, under any circumstance, know the risk and reward ratio for investing in a private company. It's for my protection, though. For my protection. Moving on. FTX is going to be listing a dollar spot index on their perpetual futures section. I don't really know. I don't use FTX because it's a shitcoin casino. I do think it's very interesting, though, that we are now seeing a spot ETF for the dollar in the futures market be introduced, almost as if, and my understanding, and this is just my interpretation of these things, is when different commodities are introduced into the futures market, they have some sort of a spot ETF introduced. There's an expectation that volatility is going to be introduced into this commodity, and that there is an opportunity for money to be made. If this is just going to be like a flatline commodity that's going to stay, for argument's sake, just valued at $1 per unit for the next 6 months, like there's no reason for this marketplace to exist. So I think it's really interesting that this is happening. It would be more interesting personally if this was going on in, I think, like the Chicago Mercantile Exchange and being lauded. Sorry?
Apologies. Ignore what I just said.
We're just doing a mic test in the middle of my monologue.
Yeah, just in the middle of your rant. I get it. I thought I was on mute and just, you know what? I'm just going to cut you off.
Yeah. I mean, like, let's just keep, like, you're going to stop. I was enjoying the, like, talking over me part of this. Look, I think it's really interesting. SBF is calling a shot. He's saying there's going to be volatility in the dollar. I think a lot of us who are watching this, paying attention to this type of news, believe and know that to be true. I think we also should start to digest a little bit, though, of like, what does that mean? Like, what does it mean if like there's an expectation that the dollar could be going up and down in any direction at any given point in time? Do I think that's going to necessarily impact, like, are you going to be able to buy groceries tomorrow or have a harder time or easier time buying groceries in 2, 3, 4 days in the future? No, I don't necessarily think that. I will say things are going to get more expensive. I don't expect inflation to temper down. I think these are little clues that are actually left out there that there's something bigger going on. Perfect example of this was in the summer of 2020. The Chicago Mercantile Exchange introduced a water future spot ETF with the expectation that water prices were going to drastically change over the course of the next decade. And as a result, an opportunity needed to present itself in the market for people to be able to capitalize on this shift. Yeah, you can read that as people think water is going to be such a scarce commodity that its value will continue to increase. And instead of trying to find solutions to find clean drinking water, a bunch of bankers are like, how do we make more money off of this? Shows you the backwards incentive of our current financial system. So not financial advice, but let me tell you, if we can get a huge, and I'm talking huge short position on the dollar spot ETF right now, do we think we can crash the dollar's price?
No, it's the biggest shitcoin in the world.
That's not how that works, by the way. Like, please do not do that. None of this is financial advice. You should do your own due diligence, especially in the futures markets where it's like a whole other beast in and of itself. I just think it's really interesting that SBF is like almost calling his shot, saying like, "Yo, the dollar's about to get fucked. Let's make some money on this."
I'll start. I think SBF is not suicidal, so I'm just putting that out there. He's a happy man, billionaire, living out the dream. I'm just kidding. But they have killed people for less, so for what that's worth. The next thing is, this is a very dangerous market. I would not be shorting the dollar at any way. I mean, it's not uncommon for FTX and these exchanges to trade against their clients. If you think you know when to short and when to go long on the dollar, you're better off just holding dollars or buying Bitcoin. You know, that's the two buckets I put it in. Don't complicate these things with leverage and all of that. And then the last point, Q, it is fucked up that they have a future. The CME has a futures market for water for contracts. How funny would it be though if, like, an FU to the people, the bankers that are doing that, they do like final settlement on it. So it's like, oh, we're delivering 1 million gallons of water to your mansion and just like dumping it into their house and stuff. Like, this is what you wanted, bro. This is what you wanted. Like, you wanted the clean water. You got to hold on to this. This is not our problem now. I just think karma would be a bitch, but obviously that doesn't happen. But yeah,
that would be gold. But for me, I think access to clean drinking water for humanity is such an important thing. It's just something that I personally am passionate about. But I also
there's a fund, Charity Water, which they do the Bitcoin Water Trust or Water Fund. I believe the Bitcoin is locked up until 2026. They were going to do a 5-year lockup of any of the donations that went into it. I mean, I know there's a lot of big names. I think they raised up to 100 Bitcoin in it originally. And then they're obviously allowing donations. But yeah, their project is to open up water sources for people around the world, because clean drinking water kills millions upon millions of people a year that are drinking dirty water, basically. So I think it's a very important project. Definitely something you guys should check out.
Another one that
you said clean drinking water kills,
dirty drinking water. Clean water, yes.
Dihydrous monoxide, my friends.
Very dangerous.
Lack of access to clean drinking water. But another plug for another charity that is very near and dear to my heart, built with Bitcoin. They actually, and this is why I obsess over this, Chris, every single time we're in a spaces with Youssef, who's one of the founders, the fact that they first focus on building out these communities before they worry about building the schools. And one of their main criteria is access to clean drinking water, which they have built out for some of the communities that they have gone in and helped. says everything I need to know about what that business and that charity and that their priorities are and how they really focused on not just throwing money at the problem, but helping build up these communities so that they themselves can be self-sufficient and continue to grow. Neither are sponsors. They're just two different charities that we each like personally. So no advice, just do your own due diligence there. P, it's time for us to talk about the elephant in the room.
Absolutely. I just want to say one thing before we go into that, which is I think it's really interesting to talk about how the futures and options markets were not originally intended, or at least the futures market was not originally intended to be a financial instrument per se in the way that it's used today. Originally, futures contracts were designed to allow producers of goods and consumers of goods on an industrial scale to hedge the risk associated with the commodities they needed in order to effectively produce goods, right? So, if you needed, I believe they were sort of invented in ancient Rome around like olive production. And it's just so interesting to me. Like, I don't even think you can take physical delivery of almost any futures contracts anymore. It's all just, cash settled. But if you think about futures from the original use case for things like futures, which again, it's like you pay for a futures contract, and if you are buying one, it guarantees that you will be able to accept delivery of that good at a specified date in the future when the contract expires, assuming it's above the actually no take the futures good in the future, but now of course it's all become completely financialized and people just use them for leverage trading, which is a fascinating development. Anyway.
I will say I've never heard of the Roman olive trades. I do know for certain that in like 1600 Japan, the rice farmers and traders, they started using futures contracts to do exactly what you're describing, to get ahead of potentially overgrowing this year's crop, or if they're expecting a tougher season next year, to try and, I think, up their prices now to make up for what they anticipate to be a lower grow for the next season.
Yep.
Which is why like Japanese candlesticking and is something that I use extensively. I think it's a valid thing in Bitcoin, but
it seems like such a leap because the Japanese, I could be totally wrong, by the way. It may not be the olive markets from ancient Rome. Regardless, let's keep going. Elephant in the room, as you said. The thumbnail we have today is, of course, Putin riding on the back of a horse with holding Bitcoin. This is satire, but the story, of course, is that the Ministry of Finance of the Russian Federation has announced that they plan to let any industry in the country accept Bitcoin and cryptocurrencies for international trade without restriction. They're saying Chebezkov has said, he's the director of financial policy department for the ministry, explained, we are going to allow international settlements in cryptocurrencies for any industries without restriction. Interestingly, there seems to be some kind of conflict between the financial ministry and the central banks. So the Ministry of Finance is indicating that it prefers kind of a local approach to regulation of digital assets, whereas the central bank is pursuing a broader range of regulatory action. I want to make it very clear. These entities are not doing this. They're presenting it as like, this is important for the good of the Russian people. That is not why they are doing these things. They are doing these things to create more effective control systems, right? This is not, Putin and Russia being like, oh my gosh, Bitcoin is so good. We should be embracing Bitcoin for freedom. That is not what this is about. This is about control. So the only reason they're doing this is because they believe that there is a financial and sort of macroeconomic advantage to doing so. And it's really important to remember that. I'm curious what the two of you think.
I will just start by saying we talk a lot about how Bitcoin is for enemies and whether or not we like it, the network itself will continue to work, whether we agree with who is using it and for what reasons they use it for. I do think, unfortunately, in the eyes of the West, a move like this is one step back for Bitcoin, but also as a use case example, it is still two steps forward. So I do think we are slowly and steadily moving the ship in the right direction. I think as more countries start to see trade settled quickly, efficiently for low fees on the Bitcoin network, you start to view and see real world examples of why the incentives are better for other nations to also just, why are we using the dollar? Like, why am I beholden to whatever these fucking Americans decide to do every 2 or 4 years? And in turn, like, hey, I may not like Vladimir Putin. I may not agree with what he's doing, but he's running a much better business operation. His margins are way better. He's able to trade when and however he wants with whoever he wants. Isn't that the way the world's supposed to work? What a novel, crazy idea. I don't know. You know me, I have too big of a bias when it comes to sanctioning countries and not allowing them to enter international trade, especially given the fact that we are in the midst of the largest global energy crisis, and yet Iran sits on the largest stash of oil, yet the West refuses to allow them to sell that oil in the public markets. Blame that for your high gas prices, not Putin, not these Russia sanctions.
Yeah, I think Q hit a lot of really good points there. I look at this news kind of like the China news. Like he's going to accept it and then ban it and then accept it and then ban it. And I really think at the end of the day, his long-term goal is to accumulate for himself and his country. So I could see him, I think it's still not allowed to be used for their citizens for peer-to-peer trade, but it's allowed for international trade. So he's just basically trying to get the Bitcoin into the ecosystem of his economy. And then I could definitely see him confiscating it from the individual citizens. If you don't, jail or death or whatever it may be. Bitcoin's bad for dictators, full stop. So at the end of the day, he wants the Bitcoin. He doesn't want his citizens to have it. And I think that's the long-term plan for him and Bitcoin, basically.
To quickly clarify that point, Chris, it is still banned by individual citizens, but that was due in large part because they wanted to avoid bank runs at the beginning of this war. They have not technically changed that rule. However, people are getting their rubles and putting it in other things as quickly as possible for those who don't necessarily want to stay in Russia and deal with the backlash of what is going on. Remains to be seen how this pans out. I do want to hit one last story though, Chris, if you want to just quickly touch on that.
Yeah, so it was announced right before we went live that Ray Dalio, the founder of Bridgewater, the world's largest hedge fund, has resigned. This was kind of not come as a surprise. He had a 12-year succession plan. He was kind of gave the president and CEO status of the hedge fund to two younger analysts that had been working with him for years. So he was still on the board, and he's officially stepping away. This is just kind of big news because Ray Dalio, I know many people have learned from the value investing space, and he's made comments about Bitcoin before in the past. He actually right yesterday, he tweeted, "Cash may not be trash. It might be a good asset to hold temporarily." But I know even a couple months ago, he was asked, would you rather hold bonds or Bitcoin? And he said Bitcoin by far, because, the secular bull market for bonds is coming to an end. And Ray Dalio kind of made infamous that trade that you hedge your risk with bonds or with stocks by buying bonds. But I think he sees the writing on the wall, and that, the bonds are no longer a good trade. And I think he's stepping away at the right time. They still have $150 billion on locked up in that hedge fund. So they're doing quite well. And, I wish Ray Dalio nothing but the best to enjoy retirement with his friends and family. So that's it. Anything else you guys want to add?
Yeah, I just want to quickly add and point out, I was reading this report of like the best performing hedge funds for 2022, and Bridgewater is ranked number 2. And it turns out all these macro hedge funds have been having an excellent year trading off of macro trends. If you haven't, like, this is a terrible thing to do, to tell you to go to a different YouTube channel, because we want you to stick here. We're about to cut to a commercial and be joined by Fred Thiel for our interview with him. But if you haven't, you should watch at least the video version of Ray Dalio's Changing World Order. The book itself is excellent, but the video is well worth your time. I'm going to call a commercial break, reminding everyone first to lock in your tickets to Bitcoin Amsterdam. This event is happening in 8 days. We are going to have some of the most interesting, most polarizing figures talk. Yes, the entire thing will be streamed, but for all of you who are American, which is a good majority of you guys watching right now or listening later, it will be streamed live. So most of those talks will be happening while you are fast asleep. It will all still exist on our YouTube channel, so you will be able to catch those for those who are not able to make the flight or make the trip out. But if you are in Europe, you are not going to want to miss. This is going to be the biggest party in all of Europe land for the year. Lock in your tickets now. Ticket prices will go up on Friday. Use BM Live to get 10% off. Let's cut to a commercial, and we'll be joined by Fred Thiel shortly.
You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. You are listening to Bitcoin Magazine Live. Listening to Bitcoin Magazine Live. Number one Bitcoin Magazine Live. Samba.
No, I pulled a P. Thank you for sticking through those commercial breaks. I am excited to introduce our guest today, the CEO of Marathon Digital Holdings and previously the CEO of GameSpy, local corporation, Lantronix, and served as chairman of the boards to the Youth President Organizations Technology Network and as chairman of the FinTech Sub Network. He also serves on the boards of several other companies, including Odin Technologies, OptConnect, Gatekeeper Systems, and Sequence Software. Fred Thiel, welcome to the show.
Thank you. Glad to be here.
So
It's great to have you.
I said a lot of companies and words. I feel candidly like I did not even do justice to all that you have done. What did I miss in introducing you?
Just that I'm an old fart who's been in the technology industry for 40 years.
You are not doing yourself justice, sir.
So
Thank you.
as you've been in just technology as a whole for so long, would love to just hear how you first heard about Bitcoin and what was that initial reaction?
So, kind of a long story, but I initially heard about Bitcoin back in 2011, and then kind of was following it. I've always been a science fiction fan and a lot of cypherpunk stuff, and really looked at Bitcoin as something of a curiosity. It was interesting. And then one of my former CTOs called me one day and said, this is kind of as a result of the '08 crisis, now this is most right 2013. He said, I'm so sick and tired of what's going on in the markets and just government oversight. I'm putting 100% of my cash into Bitcoin. I said, what? He said, I'm putting 100% of my cash into Bitcoin. I thought, wow, that's ballsy. So fast forward about another year later, and we were talking, and he said, yeah, no, this is really exciting. I'm doing all this stuff. So he kept kind of prodding me. And then in early 2016, I started looking at how trading was happening in Bitcoin, and I had some time on my hands, and sort of had thought about there's this really interesting arbitrage play that seems to be happening between exchanges. And I was seeing what Alameda was, the kind of the type of strategy similar to what Alameda used, and growing up, I had, sat around the dinner table. My stepmother was the senior economist at the OECD, responsible for banking and regulations, and helped bring the now, Soviet Federation into the OECD and then into the EU by helping craft a lot of their financial regulations. And so dinner table conversation had always been about regulations. And so I thought it would be really cool if one could build an exchange that allowed you to trade on top of all the other exchanges. And so wrote a white paper for a business called Sprocket, which was essentially an exchange that would allow you to trade across multiple exchanges out of one order book and one wallet. And raised a little bit of money, started building the product. Couldn't get anything like this license in the US, went to Switzerland, talked with the authorities there. They thought it's great, but if you're successful, you're going to have to become a bank, so don't even try. Ended up in Liechtenstein working with a law firm there to get the Liechtensteinian government, who's part of the EU, to craft a law that essentially defined Bitcoin and Ether as currencies such that they could be traded as foreign exchange under a foreign exchange license, got a foreign exchange license and started trading. And the problem is that when you're successful with these types of things, all of a sudden the regulators say, okay, well, now you have to do this, you have to do the other. And in the end, there was a need to get a banking license and other things that really were nearly impossible for a US-based company in those days. And so we ended up abandoning that project. But I learned a huge amount about Bitcoin and Bitcoin trading and aspects of Bitcoin in the crypto market during that period of time. And I got involved with Marathon in 2018 because a close friend of mine who was CEO at the time, Mariko Komodo, he had joined in 2017 with kind of a mandate to build a Bitcoin mining business inside a public shell. Marathon's history as a company started back doing vanadium mining way back when, and then did some real estate stuff, did oil and gas stuff. And these smaller public companies, they get taken over by investors and repurposed. And you may have heard the expression about buying a public shell, which is really like an empty public company that's not doing anything. And Marathon was one of those back in the day. And at one point, a group of people had sort of focused the company on being a patent troll, and Marathon Patent Group, which was the immediate predecessor to Marathon Digital Holdings, acquired a bunch of patents, one of which is a basic underlying patent for limited voice commands for an electronic device, think Siri, Alexa, and had prosecuted this patent against certain large companies that had were using this technology and gotten a license fee eventually from one of these large companies, but had essentially run out of money. And so another group injected capital into the company and wanted to direct it to doing Bitcoin mining. And Mariko Komodo joined in 2017. He asked me to join the board in 2018 because of my just technology background and knowledge of crypto. And that was kind of the start of Marathon's mining operations. But I've always found Bitcoin and crypto to solve a huge amount of problems created by the friction that exists in the financial systems. And the whole issue of just trying to wire money when I was running this startup in Liechtenstein, wiring money from the US to a law office in Liechtenstein, you'd think it'd be easy. It's not easy at all. I mean, it was, well, wait a second, is this lawyer on an OFAC list, et cetera, et cetera. And it was just very complicated and just kept getting more and more reinforcement that, Bitcoin was a solution to a lot of these issues. And continue to believe that still to this day. So.
No, I really appreciate that. And I want to touch on that aspect in a little bit, but there's something actually I didn't even realize about your story. The experience you had with building out an exchange and then having regulators practically just come out of the woodworks to just kill all the work you guys have done. And we have a lot of conversations on this show just about attempts to regulate or create rules and boundaries for Bitcoin more specifically. We don't really give a rat's butt about crypto or any of the other shit coins, as we like to say here. But I'm curious if you pay attention to some of these regulatory efforts that are going on in our country right now as it pertains to just proof of work mining or even just the broader Bitcoin ecosystem. And if anything sort of flashes like this warning sign of, wait, I've lived through this once before in my previous experience, this is a really bad thing. Is there anything like that right now going on in your opinion?
Yeah, I mean, back when the internet was a new thing in the late 90s, I was very involved in Ethernet and datacomms technologies, and saw the whole rise of the internet from the perspective of, at first you could go out and use this thing called Netscape, and you could go look at some websites that had a bunch of text and hyperlinks on them, and everybody was saying this is used by porn and crime, and it needs to get regulated up the gazoo. Not unlike what's happening in the crypto world today. The difference is, in the world of Bitcoin and crypto, you have trillion-dollar markets that have established, and so the regulators are having to play catch up. If you go back to the early days of the internet, Web 1.0, there was no financial incentive at the base layer 1 TCP/IP. There was no revenue there. It was all about the applications you were going to build, and Web 1.0 was publishing information. And it wasn't until you really got to Web 2.0 that commerce really started, and you had the ability to share content and do other things. So in the crypto world, today, I think as relates to Bitcoin specifically, the major battle that's going on with regulators, if you want to call it that, it's a discussion, really a debate, is proof of work versus proof of stake. And we spend a lot of time educating the regulators, the energy regulators especially, about the differences between proof of work and proof of stake, how proof of work is inherently so much more secure than proof of stake. And don't need to share with you guys all the reasons why proof of stake is really a re-centralization. If anything, it's moving Ethereum away from what was a decentralized network to something highly centralized and highly controlled. But really, it's letting people understand the why of proof of work, and then also the fact that proof of work, if you look at even the latest Cambridge report that was published last week, they came out and said, the Bitcoin network is now using less energy than it used to. It's emitting less greenhouse gases. And while they didn't conform their numbers necessarily to the Bitcoin Mining Council's numbers, it was still in the high 30% range that was coming from renewable and sustainable energy sources. So, we're starting to get that education out there. We're also starting to have people see and understand the benefits of proof of work mining as relates to stability of the energy grid. I was just in the Middle East working with an energy regulator there, where they have an issue where in the summertime they have to use and generate lots of electricity. In the wintertime, it's considerably less. And what do they do with all that excess capacity? And how do they avoid having to pay subsidies to consumers for the price of electricity? And they have really bought into the fact that Bitcoin mining is a great way to balance their grid. It's a great way to eliminate government subsidies for consumers, especially if the government energy producer is the one who's generating the Bitcoin. And I think we're going to start seeing that more and more, that energy companies, and this is something I've been talking about for over a year, really need to get involved into the Bitcoin mining business, because it's a great tool for them, great for the consumers, great for the energy grid, and great for everybody all around. And at the end of the day, the Bitcoin global network uses less than 0.1% of the energy that's produced in the world. There are a lot of uglier things that use a lot more energy than that, and a lot of less useful things that use a lot more energy. So just about educating people. I don't think we're going to see any really strong regulation in the US as relates to trading and movement of Bitcoin, et cetera, outside of traditional KYC AML, which is just something we all have to live with, unfortunately, if you're a financial institution, public company, et cetera. But I'm very optimistic that the regulators are going to let Bitcoin kind of be separate and apart from a lot of the other cryptocurrencies that are thought to be securities and deemed to be securities. I've spent time talking with Chair Benham at the CFTC about this, and he's very focused on DAOs now, as is Gary Gensler. And I think the regulators are looking at these types of decentralized organizations, and how do you hold somebody responsible if and when they do something bad? Bitcoin, everybody agrees it's a commodity. There's some accounting issues the regulators need to deal with. We need to be able to turn Bitcoin into property as opposed to this long-lived intangible assets. And that only really matters to financial institutions, because how they hold it on their books, they can't mark their Bitcoin to market. They have to essentially just impair it. Anytime it goes down in value, they have to mark it down, but they can never mark it back up, which financial institutions don't like. And investors don't like. So, there's some accounting rules that have to get put in place, but this is basic blocking and tackling of any new asset class that gets created. So I think it's just par for the course. I would be much more worried if we were in the Ethereum camp or one of these other crypto stablecoin areas, because those areas are really going to be addressed and a kind of focus points for regulators coming forward.
I do. I don't know if you caught this at the tail end of when we were talking news and notes, but I have concerns about the fact that it feels like the only regulators on Bitcoin side is Gary Gensler. And should Gary Gensler just be asked politely to not return to his position, you kind of have this like wild card of, well, hopefully the next guy up or next girl up also views things the same way he does. Um, I do want to just maybe unpack a little bit about, we see jurisdictionally in this country conversations happening around energy usage, around Bitcoin mining. We have New York doing everything possible to, I think, make Bitcoin viewed as some sort of like evil thing that exists in our world. Meanwhile, you have a state like Texas, which I'm not shy to admit over the last 2 years, I spent a lot of time mocking Texas's energy grid. And then this last summer, I had to eat my own words because we saw them really answer the call, embrace Bitcoin, and use Bitcoin mining to its benefit. Um, I wonder if when you see examples like Texas or New York, how much more time and effort are you spending to grow the ecosystem in Texas? And also, how much time are you spending trying to combat some of that FUD that goes on in a place like New York?
Great question. So I think Texas is an exciting market for Bitcoin miners. It's an unregulated market, which has its pros and cons in that energy prices float and you can trade the energy markets there. The challenge is a lot of Bitcoin miners have decided to set up shop in Texas, and so it's getting to the point where there's some saturation going on, and ERCOT's role is really to try and balance the grid. And with all these new Bitcoin miners coming online, it's becoming more and more of a challenge. So I think we're going to start seeing ongoing delays for new mining operation approvals. It's not something that's from an ERCOT perspective affecting us at all, but I think there's a lot of mines that have applied for power permits, and I think you're going to start seeing more delays there. We're kind of very focused now on areas outside of Texas. With our King Mountain site, we'll have 280 megawatts running in Texas when that site's fully operational here this month, and so that's enough concentration for us in Texas that we now want to focus other places. We've got some of the applied blockchain sites that will come up in the end of this year are in Texas, and then the bulk of it is really going to be in North Dakota, and then we're also looking internationally. So we think New York is a market we've shied away from purposefully. We think, like in any situation where you have, in this case, a bad actor who pissed off people in the community, they went to their government regulators and complained, and the government regulators and politicians have decided to lash out and specifically target Bitcoin mining with their moratorium. While you could argue back and forth that they're specifically targeting Bitcoin mining or not, basically, resuscitating a fossil fuel plant for specific Bitcoin mining seems to be a pretty targeted attack in my perspective. So we're trying not to do anything at all in the state of New York. We just don't think it's a friendly environment. We think there are other states that are much more friendly, and we're focusing our efforts there. And you may say, well, why don't you help lobby about the state of New York thing? Well, we have to focus our efforts on lobbying in the states where we do want to work. But I think New York over time will change their tune, especially when they realize the benefits of that Bitcoin mining can have on their grid. And the New York grid is a very complicated grid because most of the power is generated in the north of the state, most of it's consumed in the south of the state. All the renewable energy is in the east of the state, and the natural gas energy that's readily available is in the west of the state. Their grid operates really well north-south. It doesn't operate very well east-west. So they have their own issues there that have to do with infrastructure.
No, to go off of what you're saying, Fred, I mean, I don't think it's I think that's the right strategy personally, as someone who was at one point a shareholder of Marathon, to not exert your energy fighting this uphill battle and instead just continue to expand. It kind of reminds me almost the way marijuana was legalized in California after seeing the benefits of other states having legalized it and the cash flow and the taxes that Colorado started to get. California sat here and was like, all right, we might have messed this up and we should probably start to capitalize on this market. I could see something very, very similar of, oh, wow, Texas made how much money doing this? And we said, no, okay, you're out. Someone else come in here to fix this up. But I don't know. I drank some hopium this morning. So
you mentioned something that was interesting to me. It sounds like you guys are focused on kind of geographically, distributing yourselves so that you are not as much at risk for these kind of regulatory attacks. Totally makes sense to me. And I'm curious in that vein, how much of a tailwind did you guys experience the China mining ban, if at all? There was such a strong narrative around all of these ASICs, leaving China and flowing into other places or becoming, entering the market. I'm just curious what your experience of that was, given the position that you're in.
Yeah, I mean, we had a great tailwind. That was counterweighted, if you would, by the fact that our Hardin facility had continual operational issues, and I don't have to go into those because we're now fully transitioned out of that site. But that was a coal-fired power plant that just kept breaking, and so we got really optimistic. Great, all this hash rate's coming down. We're going to be able to mine a huge ton of Bitcoin, and then all of a sudden, the power plant's down again. So for us personally, we experienced when the plant was running, great rewards. I mean, we were mining in some days 4 blocks with the small amount of hash rate that we had, which was excellent. But eventually the global hash rate caught up, and here we are now, well back on trend where we should have been. So we're at about 240 exahash globally today. And, I think we're going to continue to see that hash rate grow as, we continue to deploy, as, other large miners continue to deploy. I think we'll eventually get back to a place where, potentially before the next halving, we'll see global hash rate, north of, mid 300s, something like that. And that's going to be really interesting for this industry, I think. Bitcoin price has to move a whole lot to compensate miners for the impact of the halving come early 2024.
So if I'm following the timeline correctly, my understanding is Marathon has actually not necessarily, actually, I take that back. Marathon has dealt with one halving in 2020, and 2024 will be the second in Marathon's company history. If you don't mind, would love to hear sort of how you guys plan around the halving, knowing this block reward is going to continuously be cut in half.
So, one of the things we did, back in 2020, and we did it again last year, was, we're always trying to buy the most energy efficient machines so that our fleet is at the bleeding edge, if you would, of energy efficiency. And by the time our full 23 exahash is running mid next year, 66% of our hash rate will be based on S19 XPs, or essentially the most energy efficient miner out there, running at roughly 21 joules per terahash. Put that in context, the Bitcoin mining fleet globally today averages about 46 joules per terahash of energy efficiency. Having a fleet that our average come mid next year will be about 24, 25 joules per terahash, will make us one of the most energy efficient miners. And what that does is gives us a cost advantage at the halving, because the miners we're using are so energy efficient. And then by doing things like overclock and other things like that, using immersion, you can extend those benefits. So the goal is to maintain as low a cost to mine as possible so that the impact of the halving is minimized, and then you have to let Bitcoin price go where Bitcoin price goes. But if you think about it today, generally the break-even point for most miners today is in the kind of mid-teens, so $14,000-$15,000 per Bitcoin. It's not ours. Ours is lower than that, but the average miner is kind of at that level of the big guys. So come halving, effectively, your cost is going to double, right? Because your reward rate halves. So at $26,000 a Bitcoin, $30,000 a Bitcoin, you'd be break even. So Bitcoin price has to move up for the industry to continue to thrive and grow. The best thing about the Bitcoin network is that it self-regulates. If miners start pulling miners offline because it's not economical to mine, then the difficulty rate drops, which means that you need less energy to produce a Bitcoin, which means all of a sudden you return to profitability, and stasis will always be kind of found. So likely long term, not at this halving, but most probably by the time of the next halving, you're going to see margins in the industry come down to kind of 30 or 40% for margin on the marginal cost to produce a Bitcoin. And that'll essentially mean only really the large scale or highly specialized operators who have very unique power pricing or power deals will be able to continue to operate. And we'll see kind of a broader cleansing. I think you're also going to see a lot more energy companies becoming primary miners, meaning mining for their own account. And that's a whole other ball game because they obviously control their energy costs in a very different way. Another industry that I think is going to be interesting is alternative fuels than traditional energy that we use today. So Marathon, for example, our goal now is we establish our Bitcoin mining operations behind the meter at the source of energy at a renewable energy plant, which is typically solar or wind, primarily wind in our case. And what that means is our cost, our marginal cost to produce a Bitcoin when the wind is blowing is very low. And when the wind isn't blowing, we have to take energy off the grid, and then we're trading on the grid just like everybody else does. And so by partnering with large energy companies, in this case, NextEra Energy is our partner in West Texas, we're able to leverage their energy trading expertise, as well as obviously a very low PPA on the wind side. And when the wind does blow and ERCOT needs to buy energy from us and we're curtailing, we can sell that energy back to the grid at very high margin. So we benefit from it on that side. So I think you're going to see miners that are able to do that will thrive. Miners who are sitting on grid only, meaning they're not at the point of power generation, they don't have kind of captive access to wind, solar, nuclear, biofuel, hydro, whatever it is, they're going to be more of in a world of hurt as these energy markets keep fluctuating. I think if you look at how a number of the hosting companies operate today is, they contract with a miner at a fixed rate per kilowatt hour, and then they go out and play the spot markets. And I think, that's gotten some people into trouble. It certainly seems to be a challenge for some of the larger third-party hosting companies. Core has already talked about that with their Georgia facility and how that's impacted them. And I think, you're going to see it with other miners as their energy contracts renew and go up in price. So I think we're going to see a cleansing coming forward here in the market, and it'll be quite interesting. But again, the beauty of Bitcoin and how the Bitcoin network operates is that it self-regulates, and it's really looking for this stasis point where there's enough mining capacity to ensure the security of the network, and at the same time ensure enough profitability for miners such that they're willing to keep their miners operating.
Can you speak a little bit more to how the mining landscape is changing or may change as these major energy companies that you mentioned start stepping into mining themselves? Like, how do you guys think about that? How does that change the competitive landscape overall?
Well, the most competitive aspect of mining, there are really two areas. Think of it, there are three constraint points. So as a miner, we look at access to rigs. So how do you get the best rig possible at the best price possible? How do you get energy at the right cost with the best hosting possible? And then how do you get capital to invest in those two things? In our case, our model is asset light. We don't like to own the infrastructure. It's a very different economic model to own transformers and switchgear and all the power substations. That's an energy play that is a 20-year model. And the world of Bitcoin is really 3 to 5 year cycles where you have whole new equipment that comes out, new technologies. For example, now we're shifting from air cooled to immersion. That means all that infrastructure you invested in the buildings you built, the containers you bought, you have to throw those out or reconfigure them. So you have to invest even more CapEx. So we prefer not to have to do that CapEx investment, instead invest all our capital in miners, and that we partner with people who are doing best-in-class operations. And so the third-party mining model works if you can negotiate the right power pricing. And we believe that we have that model today. So that gets us the benefit. But the energy companies, in some cases, they're essentially able to take all their stranded energy and invest that or deploy that for Bitcoin mining. I don't think we're quite there yet where you're going to see an energy company put a gigawatt of their own energy generation capacity at Bitcoin mining, but you are seeing energy companies already putting in significant numbers of megawatts. And it wouldn't surprise me at all that within the next 3 years, you're going to see a major energy company have upwards of 20 or 30 exahash of mining capacity running. And that's going to change the game for the hosting business, because you're either going to be a self miner or you're just going to be an operator of hosting for retail. This really business of being a third-party hosting company for large-scale miners like ourselves, I think is going to disappear over time. It'll be the energy company will provide the hosting, or you're going to own all that infrastructure yourselves. And I think potentially over time, you might see some miners even own their own power generation. But I think that's quite a far ways off at this
That's
point.
so interesting. Can you, for the audience, give like a super high level overview of the broad strategies that, large scale mining operations like Marathon can sort of operate under? You mentioned how you guys approach it. What are kind of what are those broad categories, like the top sort of 3 to 5 strategies there?
Yeah, I mean, so if you think about the traditional model, Riot, Core, any miner like that, they take a facility, they find a site, they get a power contract with an energy company, or they buy it off the grid. And then they bring in third-party miners, companies like Marathon, to mine at their facilities. They get those miners to pay deposits, even make CapEx contributions to build out the infrastructure, and then use those revenues and those cash flows to subsidize their ability to do self-mining themselves at those sites. That business model, I think, is going to disappear because the capital required to build out a third-party site for third-party hosting, and with the potential bankruptcies of miners, et cetera, impacting these companies, it's a very low return business. I mean, if you look at the filings for Riot and for Core, what you'll see is their third-party hosting businesses lose money. They don't make money on that. And so why do it other than to use it to subsidize your own self-mining business? But if they're not profitable, they're not providing any subsidies. So as we look at this, we think it's better to be a pure play self-miner and just mine, but then partner with people like NextEra Energy, for example, where we can get really exciting energy deals that allow us to compete side by side with any of the top vertically integrated guys. And I think if you were to compare our cost to mine a Bitcoin with any of the top fully integrated guys, you'll see we're right in line with them. So and in some cases even much better. So that model of hosting for third parties, use that to subsidize building the infrastructure for your own miners, I think is a dead model at this point. And time will tell. In our case, it's asset light. The benefit with our strategy is that if we want to move to immersion, we can just go to whoever's got the best solution, plug in there. When it comes to immersion, we've spent a lot of time testing lots of different solutions. We've picked the players we want to work with relative to the container technology and the immersion technology. And then, we go where we can find the best deals to work with those guys. And that agility provides us with a huge amount of flexibility in our business model. If after 5 years at a site, we can pick up our miners and move, or we can sell those miners and just establish a new site, we don't have to continue investing in an old site. So for example, if you're a large company like Riot or Core and you've got all this investment in infrastructure in Texas, what happens if the market changes in Texas, right? They own all that infrastructure. They're stuck there. Me, at the end of my hosting agreement, I pick up my miners, I move. So our model provides for a lot more flexibility. And then the third model, which very few people can do, is vertically integrated in a different way. And that's what Bitmain does. They manufacture mining rigs and then they mine their own Bitcoin. And they do that using, by partnering with people, either in the business or establishing their own Bitcoin mining operations through affiliate relationships with companies that they own. But, there are very few hardware manufacturers.
Oh no, I think we lost you, Fred. Come back to us.
I'm here. Am I back?
Yes,
yeah.
you are.
You're back.
Good. All right.
Got it.
No, this is all super, super interesting. And I'd love it if you could share, despite all of these different sort of strategies that Bitcoin miners approach the industry with, capitulation and shifts of this strategy are not, no one system is agnostic from that. I feel like across the industry, a lot of people, especially over the last 6 months, as Bitcoin's price is just sort of cratered, we're sort of dealing with, I think, a shift in strategies. Do you mind touching on sort of, I jacked up, my bad, P. Do you mind touching on just sort of how you guys shifted your strategy and what Marathon's capitulation did look like?
We haven't changed our strategy in the last year, really. We haven't sold any Bitcoin, unlike our colleagues in the industry that have sold a lot of their Bitcoin. That doesn't mean we won't sell Bitcoin going forward to cover operating expenses. Our model is very much, now I'll sound like the, old-fashioned financial guy here. But we use a calculus that's called a weighted average cost of capital. So what does capital cost us to raise? What kind of return do we have to provide our shareholders or a lender in the way of interest on a loan? And what types of things are we going to invest in that'll give us a return that's higher than that weighted average cost of capital? And with interest rates going up, debt's getting more expensive. Luckily, Marathon's been able to get debt at very reasonable prices. And thankfully, we have, as a public company, with a high volume of sales in our shares, the ability to raise money in the public markets. And so that allows us to, invest in machines and grow. But, going forward, do we want to use expensive debt or do we want to use expensive equity potentially to pay for our operating expenses? And so we're constantly looking at, is it better to hold Bitcoin? Is it better to sell Bitcoin? Is it better to do a blend of the two? And what's really interesting is that we did a study where we looked at, if you had started mining in mid-2020 and you were going to mine through mid-2025, we used kind of Biduda's projections on global hash rate growth and kind of a mid case for the price of Bitcoin, where it's basically going to move up towards kind of 50,000 by mid 2025. So fairly conservative estimate. 3 scenarios: you hold all your Bitcoin, you sell all your Bitcoin, and you hold half and sell half. What was really interesting was, based on that, holding all your Bitcoin for that 5-year period was the least profitable. Selling all your Bitcoin for that 5-year period as you earned it was the next least profitable. And the most profitable was selling half your Bitcoin and holding half your Bitcoin. And I did a presentation on this at Bitmain's last event. It's really interesting. If you look at an environment where Bitcoin isn't going exponential, then it really does make sense to sell some Bitcoin to cover your operating costs. Now, that being said, some of our colleagues in the industry sell 100% of the Bitcoin they produce because they have high debt service, they have other issues like that. We have very low debt. Currently about $50 million of debt. So it's next to nothing on the scheme of things. So, you got to look at that weighted average cost of capital. on how you're going to do it. The other thing, strategy-wise, we haven't changed our model of third-party hosting. We've made more and more of a commitment to immersion mining as we look at kind of the 2023 kind of deployments and what we're going to do next year. But I think otherwise our strategy is pretty much the same. Some of our colleagues in the industry are abandoning sites. They're selling all their Bitcoin. They're doing all sorts of other things. Some who were building sites just for their own use are now having to bring in third-party miners to help cover some of their costs. Again, we don't have those challenges. We don't have those infrastructure capital raising challenges because we don't invest in infrastructure.
So I just did some quick math, Fred, while you were explaining all of that. Based on the debt level you provided, it would take about 2,500 Bitcoin to just pay that off. And a quick little Google search based on your guys' last earnings report, you have just under 9,000 Bitcoin on your balance sheet. So by the rules that Jay-Z taught me, you can pay off that debt more than 3 times over. Y'all are just doing fine.
Yeah. We actually have over 10,000 Bitcoin on the balance sheet for our most recent reports. So, and now our King Mountain site is ramping. We're most probably one of the most fully transparent Bitcoin miners out there. We have our own pool. Anybody can go look with a block explorer or with, to see what our pool is producing. And if you've been looking at it recently, you're starting to see we're winning a lot of blocks. And the only way we can win a lot of blocks is because obviously we're putting on a lot of hash rate. So things are looking good.
Has anything going on in the macro world, from the chip shortages, supply chain holdups, and just anything in general, inhibited Marathon's ability to reach its 2022 goals for hash rate output?
Indirectly, yes. So for example, if you think about our King Mountain site, what were the delays there in getting that site live and operational? Those were regulatory delays around, ERCOT. Those were all solved pretty early, and then it became a FERC delay related to a tax exemption for one of NextEra's partners. So those aren't macroeconomic at all. But if you then look at the drop in the value of stock, all the mining company stocks dropped 80%, something like that. The debt markets have gone up. That's impacted our ability to raise money. Granted, the really interesting thing about the Bitcoin mining industry is when times get tough, prices come down. So the machines that we ordered, we ordered over $850 million of S19 XPs late last year at the peak of the market with price protection. And now we're reaping the benefit of that because we're getting credits for a substantial portion of that order. And so the amount of CapEx we have to deploy is very low now compared to what it would have been. And so we're seeing the benefit of that impacting the amount of CapEx we have to make, which, had we needed to go to the market to raise that capital would have been much more expensive. So, we've been riding this perfect storm for us that's been positive in that we've been able to continue to grow and hit our stride. We have been receiving all our deliveries more or less on time. And we're at a kind of a point now where as soon as we receive miners, they get plugged in perspective. And, everything, knock on wood, is going pretty well. Obviously, the Compute North bankruptcies created some noise in the marketplace, but it hasn't affected our operations. Again, you can go look and see Marapool and see that we're producing more and more Bitcoin every day, and so that's indicative of the fact that operations continue without any issues. And we're excited about the future. We're excited about where we'll be at the end of this year. Even more excited about where we're going to be kind of mid next year at 23 exahash. And then, excited about what the back half of 23 and 24 are going to bring.
I want to really quickly just shout out to our audience, everyone watching over on Rumble. Just a reminder, I never get this right. All right. It's like over there where you can subscribe, and down there to press the plus button over on Rumble. Be sure to do that. If we get 50 pluses on Rumble, we will drop some free sats. Over on YouTube, if you are watching and not yet subscribed, both the like and subscribe button are down there. When we get to 100, we will also drop some sats in the chat for you guys. And of course, if you are listening to this on the podcast channel, be sure to subscribe as well. Fred, you brought up the Compute North bankruptcy filing. I'd first just love to hear what lessons you and your team took away from this interaction, this business dealing.
So I think, when you're relying on a partner to build out projects, it's kind of just like in the real estate industry. You're relying on somebody to build out commercial buildings for you to use for your warehouses. If they have problems accessing capital, that becomes a problem. And in the case of the Compute North bankruptcy, if you look at the filings, and I'm not going to stray away from anything that's public knowledge, essentially they had a capital provider who essentially took control of a couple of their projects because of a technical default, and then essentially forced Compute North to go into a Chapter 11 to protect the rest of the assets and keep operating. And so Chapter 11 is not like I'm going out of business and having to liquidate everything and pay back stuff to shareholders. It's really about restructuring the business so you can continue to operate, and it provides the company that does it a protected place, kind of like a safe harbor, where customers and vendors can't really alter the terms of their contracts, so the company has a chance to reorganize and get itself back on its legs. And so the lesson learned here was really, we couldn't have predicted that the capital markets and the financial markets were going to go so negative as quickly as they did when we wrote the contracts for these sites early last year. So lesson learned is you have to look at your hosting partner's ability to raise capital. And as you look at the partners we're choosing going forward, you'll see that they tend to be public companies, are very large, and where capital isn't an issue. So that was clearly the lesson learned. From a perspective of execution, you can never really know how long the regulatory approval process for a new mining site is going to take. And so because these projects typically take 6 to 9 months to do, you hopefully pad enough time in there. And in some cases they take longer, and in some cases they come in on schedule. So the lesson learned there is you try and work with people who have an existing site that's already permitted, where you're just adding capacity to that site, so there's less risk. So things like that are, you live and learn. And this business changes every day. Global hash rate goes up and down, price of Bitcoin goes up and down, cost of rigs goes up and down. There are new hardware vendors coming to market. Are they going to be good machines? Are they going to be bad machines? Do you choose the right vendor, the wrong vendor? There are a lot of decisions you have to make on a daily basis, and you hope that the majority of those decisions are going to be right versus wrong. And you hopefully learn from your wrong lessons. And having been in the tech industry for over 40 years, I have learned a lot of lessons over the years. Certainly had my share of blisters and burnt fingers. And hopefully Marathon as a team, we start making better and better decisions every year. So
yeah, it's the only way to grow. If you're not taking risks, you're not growing and learning. On that note,
yep.
I'm so curious to ask, like, what was the thinking behind and the experience behind sort of the OFAC compliance approach that the direction that you guys went at one point? Because then you quickly sort of shifted off of that, and what happened there?
So there was a belief, we had a belief internally that the financial markets and institutional investors would be more interested in investing in Bitcoin if the Bitcoin that they acquired was fully OFAC compliant, meaning it wasn't tainted in any way. Because one thing that in our discussions with institutional investors, hedge funds, and others that were looking to invest in Bitcoin was, what's keeping you back? And one of the things was, well, we don't know if, this Bitcoin's been held by somebody who's violated sanctions list or is on a PEP list, which is a for politically people who have been exposed politically that essentially would be violating OFAC. And so, we only want to be able to buy Bitcoin that is virgin and has never been in a wallet that has been on an OFAC list. And more importantly, we don't know if a Bitcoin reward paid to a miner for a block that includes non-compliant transactions would, in a sense, be tainted. And so, in working with our pool operator, we said, could we make an OFAC compliant filter? And they said yes. They had already built it for somebody else. We deployed it. The marketplace and it exploded in anger over that. And one of the first things I did when I became CEO last year in April was take a knee, so to say, and basically say we're not going to do it. So, end of story.
Yeah, it makes sense. I think as you mentioned, you're one of the most transparent miners that are publicly traded out there, and I appreciate it. Yeah, makes sense.
Thank you.
I also have to say there's a degree of this where you guys are pioneering a whole new industry, and it's going to involve, I think, some growing pains. And I made the joke to you when I had the opportunity to meet you at the Bitcoin conference in Miami, but thank you first and foremost for helping me make a lot of money in 2021. But I'd love it if you could just share. I don't think very many people actually realize how small your team at Marathon is and how you guys accomplish everything you have and grown as rapidly as you guys have grown. Do you mind just sharing that with our audience?
Sure. So when I became CEO in April of last year, I was employee number 4. Today we have 22 employees. And most probably by the end of this year, we'll get a little closer to 30. But essentially, we have a lot of people who are experts in different fields and are able to make great decisions, hopefully. And because of that, we can rely on third parties who are experts at what they do. Either at building sites, operating sites, designing miners, and doing things like that. As we grow the business, at 23 exahash will be 6 times bigger than we were last year at 3 exahash. What ends up happening is you have to start adding more people who can start really providing more insight as to what's happening in the future, right? Because any decision we make won't be executed possibly or you won't see the impact of that decision maybe for 9 months or a year. So if I order a bunch of machines from Bitmain or I order machines from a different vendor, I won't know if that's going to work out or not until I receive the machines and plug them in. If I contract with a hosting provider, I'm not sure that they're going to be able to execute until they do execute. And so the size of our decisions keep getting bigger and bigger. If you think about it, we made over $1 billion+ of CapEx decisions last year. Those are big decisions, and you got to be pretty sure that you're doing the right thing. And so as we add to our team, we're adding people who really help us see over the horizon and help us understand what's happening in the technology world, what's happening with hardware, what's happening with energy pricing, what's happening in the energy markets, what's happening in the capital markets. And on top of that, as a public company, as the regulators get more and more kind of comfortable with crypto miners, the regulatory burden actually grows. So, you guys may have seen that, the SEC wants ESG reporting about energy sources and where do we source our energy? What's our carbon footprint? Well, that requires people to have to do all that. And so you have a certain regulatory burden, in finance, accounting, and reporting, et cetera, that you have to add just because you're a public company and you're getting bigger and bigger. And then because of the regulatory stuff and working with regulators, you also have to have more people focused on government relations. And as we get more investors, you have to have more people who are able to do with investor relations. And as we have more mining sites, you have to have more people who are able to go out and look at these sites and make sure that they're optimized. And as we continue now also start building more and more of our own systems, around pool management to optimize how our pool operates, how our machines operates. We're doing all sorts of research around how to optimize miners, and what we can do in working with a miner developer to develop even better miners. Today, we're still like back in the early days of data centers where they were taking desktop servers. If you remember these cabinets that were, kind of 2.5 feet high, 8 inches wide, that had a lot of air in them, that people were using in data centers. And then eventually you migrated to blade servers and, 1U high rack mounted devices that were specially designed for data centers. That's where we're going now. This industry is shifting from shoe boxes that sit on shelves to high density blade based machines that sit in immersion. And that transition is going to happen over the next, 2 to 3 years. And, hopefully the right hardware manufacturers are going to do it. I know certain mining manufacturers are very focused on cooling their miners, not using immersion, but using other technologies. We happen to think that's the absolute wrong way to go. We think immersion's the right way to go. We think high density blade based servers architectures are the right way to go. And we're very focused on working with vendors to design and implement those. But again, we don't do that as an internal effort. We partner with people, but we have to have experts on our team who understand hardware design, semiconductors, understand how to choose what vendor we're going to work with, because these are decisions that we're going to have to live with for years in the future. So as we build our team, it's really building a core brain trust of people who are experts at layer 1, layer 2, understand all the plumbing and the infrastructure that goes into Bitcoin mining and Bitcoin operations. We're spending a lot of time looking at layer 2 and how we can play a role in layer 2. As a miner and a pool operator, because we actually write blocks, there's some really interesting stuff we can do there that we're looking at. And so I think you're going to see us continue to kind of not just grow our mining operations, but grow the potential business opportunities that can run on top of mining and on top of Bitcoin at layer 2 and beyond.
Can you speak a little bit more about that? I'm so curious. Like what type of layer 2 technologies you're talking about? Lightning? You're talking about other layer 2s? What's going on there?
Yeah. So I'm a big believer, and listen, I've seen lots of cycles in industry, in technology industries. Was very early pioneer in the IoT space. Spent a lot of time in the whole build out of the internet, datacom space. And you need to remove the friction points to ease adoption. And doing things with Bitcoin and even with Lightning still have a certain amount of friction to them, right? You still have to deal with keys and wallets, and you still have to deal with setting up nodes, et cetera, and in Lightning channels. And so, we look at the opportunity to build infrastructure that are, think of it as picks and shovels that just make life easier. And if you can make life easier and you make using this technology as close to magic as possible, and I'm paraphrasing, somebody with that expression, then adoption happens. And, we already have an adoption curve going on in the Bitcoin marketplace today, which is very parallel to the internet adoption. And we're kind of where the internet was in 1997. And, we're right hitting that S curve of inflection. And what's really exciting about that is the more barriers to adoption we can remove, the faster that S curve is going to accelerate. And that's something that really excites me. And so we're looking at, technologies where it's not, we're not going to build a consumer facing trading business or anything like that. It's infrastructure. Think of it as plumbing. Think of it as tools that make things more usable. Think of it as things that allow other types of assets to be secured by the Bitcoin blockchain. And so while we won't provide the securitization service, we will certainly provide the infrastructure that does it. And I think that's a really exciting area where you look at all the effort, energy, and CapEx that goes into proof of work mining to secure the Bitcoin blockchain. Imagine if you could leverage all of that to provide security for all sorts of other things like identity, like healthcare data, like financial data, property records, all sorts of data. And if you could write that on the Bitcoin blockchain in a way that allowed the Bitcoin blockchain to kind of be the immutable record for that data, Now all of a sudden you're writing data on the world's most secure blockchain, and you're doing it in a way where the incremental cost to do it is very low, because miners have already invested in the mining rigs to secure the Bitcoin blockchain, pool operators, etc. And so now this is just a value-added service on top of it. And I think when you start adding those points to the industry, you're going to start seeing more and more adoption of technologies being built on top of the Bitcoin blockchain at layer 2 and layer 3 eventually.
Interesting. What do you see as the biggest risk right now to the Bitcoin space? And the answer could be broader than just mining. It would make sense if it was, but what do you?
Well, I mean, I think the biggest risk to Bitcoin space today is irrelevance. And what do I mean by that? Well, the price of Bitcoin crashes to 1,000. That will cause a lot of people to leave the space. A lot of miners will obviously have to shut down. It'll cause, and the amount of capital that's been invested in the Bitcoin space today, both by investors in the underlying asset itself, Bitcoin, and the infrastructure, mining, etc. If all that has to be written off, then it's going to take a lot of effort for people to want to come back. So I think the single biggest risk is just that there is some catastrophic event that causes a total lack of confidence in Bitcoin. Could it be that somebody hacks it? I doubt that's going to happen. But it could be a regulatory issue somehow. I don't think that's going to happen. I don't think it's a very high risk for Bitcoin being prohibited at this point. But there could be things that happen. You just never know. The other thing, and it could be competitive. Somebody may come up with a better widget. I just don't think that's going to happen. I think today Bitcoin has grown to such a size that it's very hard to be supplanted. It's kind of like if you're going to build a search engine today to supplant Google, Ratza Ruck. It's not going to be very easy. And to be more relevant than Google is from a perspective of search results and scale that to a bigger size than Google. So I don't really see that happening for Bitcoin, but it's things we look at all the time. We're constantly looking at the threats over the horizon, what could impact us. Cost of energy could definitely have a huge impact, but that would affect really solely miners. It wouldn't affect Bitcoin in and of itself, I don't think, as much, other than longer term, you'd have fewer people mining. And so would the security of Bitcoin go down, and what would that impact it? But I think generally it's really just more a risk for people's fear more than anything else.
Got it.
What would you say, in your opinion, is the largest hurdle for global Bitcoin adoption?
Volatility is the biggest single inhibitor today to financial institutions adopting Bitcoin. So think of it this way: you have Bitcoin, the asset, as a store of value, and volatility is great for traders. Volatility is good for some investors, but long term, if Bitcoin's trajectory keeps going where it's been going, that'll sort itself out. Bitcoin is used to having these cycles, and people get more and more comfortable with these cycles ending and eventually Bitcoin coming back. So will that be how Bitcoin operates in the future? Who knows? I certainly can't project that. I don't have that crystal ball, but I think what we are going to see is continued adoption of Bitcoin that'll accelerate as barriers to adoption come down. A lot of people have been focused on the price of Bitcoin and the financial markets. Very few people have been reading things like, guess what? NASDAQ is building, together with other third parties, a custody platform for crypto assets. Why would they do that unless they thought this was a long-term, very exciting business to be in? Look at what BlackRock is doing. You look at what all these large financial companies are doing. They are building infrastructure so that institutional investors will be able to invest in, buy, hold, and trade Bitcoin and other cryptos with ease. And when you do that, you facilitate the market. And think about it: over 65% of Bitcoin today is held in long-term wallets. It's not trading. There's a lot of volatility because anytime any volume of Bitcoin hits the market, it's going to move the price one way or another. If you look at the number of transactions being done from wallets that hold more than $10 million worth of Bitcoin, it's also increasing, which says more and more institutional companies and investors are trading Bitcoin. But they don't trade it on exchanges. They trade it over OTC desks. So, retail is what creates a lot of short-term volatility in Bitcoin because they do it on exchanges. When you're trading OTC desks, you're trading a large block of Bitcoin, two parties negotiate a price. It's not like they put out 10,000 Bitcoin on an exchange and see who's going to offer it to them. They do it over an OTC desk. And the same thing happens in the stock market with block sales of stocks. Most people don't really realize that unless they've run a public company or been on the investing side professionally. So like when Warren Buffett buys stock in Occidental Petroleum, he's not necessarily buying it in the open market. He's going to a market maker and he's saying, I want to buy a large block of stock, and they find somebody who wants to sell it. And it's almost like a P2P transaction. So as Bitcoin volatility starts shrinking because institutional investors get more and more involved, what's going to happen is people will get more confident that the asset's not going to be bouncing all over the place in price. And so they'll start investing and holding their assets there. As the regulatory world for relative to how Bitcoin is taxed, how Bitcoin is held on the balance sheet, as those things become more investor friendly, more user friendly, then people can actually start using Bitcoin for transacting. But again, volatility is important. Do I want to use Bitcoin for spending if there's a lot of volatility? Do I, as a merchant, want to accept Bitcoin for consumers if there's a lot of volatility? Or do I have to turn it right into fiat overnight? In which case, why not just use fiat? So I think volatility is a trader's friend and an investor's friend, but I think it's also an inhibitor. And so as volatility decreases, you'll see more and more adoption. You'll see more and more happening. As the regulatory frameworks get more ironed out, you'll see more adoption as well. And I am super optimistic about where Bitcoin is going to go over the next 5 to 10 year period. I just think we have some rocky roads ahead of us to get there, but it's not unlike any other industry. The internet went through this. Lots of other industries have gone through this.
Okay. I was asked not to ask you this question, but I'm like the rookie at our company, so I want to still ask this question because I think it's a valid talking point. And if it's not, please shame me. You are so welcome, Fred, to shame me for asking it. But what does the future of Bitcoin mining look like when the block reward is less than one whole Bitcoin?
So the traditional answer is that there will be a crossover point long before that where transaction fees make a greater percentage of the revenues of miners than the block rewards do. Long before we get to 1 Bitcoin per block, I think we're going to start seeing transaction fees come up again as adoption happens. And now I'm not saying that people are going to be buying subway tickets with Bitcoin necessarily, but as institutional adoption continues to grow, what we're going to continue to see is the transaction value in each block will be higher and higher, and that means that transaction fees can be higher as well. If a block, for example, has let's say 200 trades in it that are $100 million each, well, guess what? The transaction fees for those will likely be quite high because somebody trading that amount is going to want to make sure that their transaction is in the next block that gets mined, as opposed to waiting for it somewhere down the road. So I fully expect transaction fees to increase, but I also expect that miners, as I alluded to earlier, there are services that miners will be able to provide the blockchain, securing other types of data that will be revenue producing in excess of block rewards and transaction fees. And so, longer term, miners really become a utility operator, not unlike a phone company. It sounds boring. We're not going to be regulated monopolies, if you would, but like any traditional industry, there'll be some consolidation. You'll have a number of large miners and then a slew of smaller miners, and they will operate businesses with some unique aspects to them that provide value-added services above and beyond just pure play mining. And that's what will kind of differentiate different miners. There'll be specialists in different areas, and over the long run, miners will have different revenue streams where the core processing of blocks is kind of the engine that drives everything, and it's the services around that drive kind of long-term profitability.
Thank you for walking us through that, Fred. And I love the analogy of consolidation because we see it across every sector. At a certain point, consolidation is a necessary byproduct. Um, I do want to ask you, and we're going to speculate a little bit, so I hope you will entertain me. But you've essentially laid out that there are three main components to the mining operation. It's buying the right hardware, the location, having the rack space, and then the energy itself. Is there potential in the future for a business to follow the model of Apple in that they have their hand in this, but then eventually they just go and we're going to bring this in-house now. We're going to now manufacture our own chips and our own mining. I can't think of the word, but the actual physical mining contraption. We're going to build those ourselves. We're going to actually go out and we're going to produce by some sort of an energy company so that we are now producing our own energy as well. Is that in the realm of possibility for the development of this industry?
Absolutely. Now, building your own energy generation or acquiring it, you can do that in different ways. And we looked at this about 2 years ago. 2 or 3 years ago, the opportunity to buy some idled power plants that were gas generating, what are called shaver plants. These are these gas power plants that basically it's like a jet engine that sits in a building, and they can turn it on when the grid needs electricity, and you can turn it off when it doesn't. And you basically get the premium price for energy because the market really needs it. And these assets sit idle sometimes, and there were some assets like this that were in the marketplace a couple of years ago that we looked at, and then we looked at all of the regulatory headache of owning a power plant and what that entailed, and the fact that it's an onerous business, and it's a 20 or 30-year business. It's not a kind of 5 to 10-year business. So I think buying traditional energy generating resources doesn't make sense. Now, that being said, alternative energy sources could very well make sense over time. But I think the best thing to do is always, and this is something I learned in the private equity and venture capital world when I worked there, is that partnering with people and using other people's investment dollars to do things gets you the same outcome as if you had to invest it in yourself. A difference with Apple and this industry is, think about Apple has a product that, unlike the Microsoft world, just to separate it, if you would, or the Android world, by vertically integrating all the hardware, chips, operating software on the device, and essentially letting apps be the only thing that third parties do in their ecosystem, they're able to essentially capture over 84% of all the gross margin dollars of the smartphone industry. Whereas they only have 20% or less market share. That's says a huge amount about Apple's power and leverage in the industry, and what they're able to do. The mining industry is different. There are about 4 million mining rigs installed in the world today. So if you're going to design chips, which costs tens if not hundreds of millions of dollars, and you're going to produce chips, and you're going to keep producing the next generation and going to the next iteration, that's a business that's really hard to do if you only consume 10% of all the mining rigs out there, right? Even at 20%, that's hard. For Bitmain at 60%, yeah, they can do that. But it's going to get harder and harder as time goes on. So vertically integrating into designing and building your own miner fully in-house doesn't make sense in my mind. However, investing together with other miners in companies that are developing mining rigs could very well make sense, because that's good for the whole ecosystem. And at the end of the day, what's good for one miner could be good for many other miners as well. So we've talked about power, talked about vertically integrating on the hardware side. Building your own hosting sites, that's already being done today by people like Riot and Core. And we don't think the profitability in the hosting site makes it worth deploying capital there. Now, would we deploy capital in energy generating resources? We might if it's the right opportunity. If it's clean energy, it's energy that can operate with very high uptime and gives us an opportunity to support the grid. We could very well do that. The question is just, again, do we want to deploy capital to do something, or are there people who have lots of that available? And today, still, there are lots of people developing solar and wind sites, geothermal sites, biofuel sites, and others, where we can contribute a little bit of capital, get access to it, get the benefits of it without having to do it all ourselves. So, as this industry grows, will people become more and more vertically integrated? Some may, but I think that it's still a very small industry, and nobody has the overall heft that's big enough to make it worth the while to fully vertically integrated energy, hardware, etc.
I want to take one question from the audience that I saw earlier, and that was just for individuals at home right now. Would you recommend they go down this path and try to set up a mining operation, or is that money better spent just buying and holding some Bitcoin, in your opinion?
So if you think about it, if you're going to set up your own mining rigs at home, and whether you do it with like a Compass or whatever, you're going to buy a miner. That's $4,000 or $5,000, and then you got to pay for the energy for it to mine, and then you got to point it at a pool, and get your rewards. Where Bitcoin is priced today, that may not necessarily be a good investment. And now I'm talking about mining at home, for example, unless you have a good use for the heat, heat your basement in the winter, possibly. But I think it's going to be tough as the halving comes along, because energy prices for a retail buyer of energy, like mining at your house, are just way too high. And even with an S19 XP in the home, that may not be profitable at today's level, depending on your cost of energy. What you can do instead is you could do things like buy hash rate futures, which are a type of financial instrument that are starting to become available, where you essentially can, it's just like in the farming industry. A farmer today who plants corn, they sell futures on their corn production. And investors buy those futures because they bet that the price of corn is going to be higher than what the farmer thinks. And they think that that yield off that acre of land, if you would, is going to be higher than what the farmer thinks potentially. And so they're placing a bet, and the farmer's placing a bet that they can get money up front for yield. And the only risk they run is that they have to plant the seed, harvest the corn, and deliver the corn. But they're getting their money up front. And so they don't have to run the risk of, where's corn going to be priced when I sell my harvest. In the world of Bitcoin mining, as a miner, you can sell a hash rate future to an investor, and they can buy, 100 petahash, 200 petahash of my capacity. And then I have to deliver to them that hash rate and the resulting Bitcoin that hash rate would produce. That's a way for a miner to raise capital for their mining operation. And it's a way for investors to invest as if they were a miner without any of the CapEx required. And so I think what you're going to see is initially institutional investors will buy these products, and then somebody's going to bundle these things together and offer it as a ETF or something for consumers to invest in. And that would be a very attractive way to get exposure. It's essentially, you are a miner, you just have no hassles. It's fully outsourced, and you don't have to do anything other than collect your the Bitcoin that hash rate that you purchased produces. You don't have to have the miners running in your house. You're not paying retail electricity. You're getting the benefit of wholesale buying from the industrial miner. And so that's an attractive way to do it. The other alternative is you can, just buy stocks in Bitcoin mining companies. But, that has all sorts of other risks just driven by the fact that it's a stock market.
Fred, I want to thank you so much for giving up so much of your time to spend with two bozos in their basements to talk about all the hard work and incredible things you and your team are doing. I want to give you one last opportunity to touch on or share anything we didn't get to talk about, as well as how people can stay up to date with the incredible work you and your team are doing.
Yeah, I appreciate the opportunity to be on. I think anybody who wants to kind of stay up to date with what we're doing, just look on our website. And if you know how to look at our pool and want to see, the block rewards that we get, it's pretty exciting. I know I certainly have a window on my desktop that's constantly looking at the block rewards, and it's a great way to see kind of how Marathon is doing. And then just stay tuned. There's going to be a lot of exciting things we'll be announcing over the next 12 months about some of the future efforts we're doing that we think are going to be exciting for the industry. So appreciate it.
Thank you.
Thanks so much,
And
Fred.
again, thank you for all
Thanks,
you
guys.
do. I want to remind everyone as we wrap up here for today's episode that tickets for Bitcoin Amsterdam are on sale. Use promo code BM Live to get 10% off of those tickets. And of course, if you are not subscribed to the print magazine, I don't know what you're doing, but you have to head over right now to bitcoinmagazine.com, hop on over to the store, get a subscription. This is a quarterly print magazine that we put out. The Orange Party edition is at the printers right now as we speak. There is an op-ed written by none other than President of El Salvador, Nayib Bukele. I highly recommend you get this. This is going to be a piece of Bitcoin history. You can get 10% off of your subscription and anything else your heart desires at the Bitcoin Magazine store using promo code BM Live. I will shamelessly plug our boy Tommy. Bitcoin War Bonds prints are still for sale over there, as well as fake Bitcoin Magazine covers. These covers are so cool. If you want a piece of Bitcoin art, hop on over to the Bitcoin Magazine store, check out one of those pieces, use promo code BM Live to get 10% off of that purchase. That's going to be a wrap for our show today, P.
Let's call it. Chris, roll the tape.